Hey everybody, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. In today's video, I want to dissect the DXY, the Dixie, the dollar, the chart, technical analysis, all the way through from the daily to the weekly to the monthly time frame to give us a good basis of where the US dollar is headed, both in the short term as well as the long term. Now listen, let's talk before we get into the charts. We all know that the debt of the US is going to be problematic going forward. In addition, we also know that in general, we see more printing and weaker monetary policy from the Federal Reserve, and that's expected, regardless of we know we're coming up to rate cuts, whether it's two, whether it's three this year, we don't know. But the idea is as the economy slows, the more printing will go on, and generally the more US debt will accumulate. So all of those are negative headwinds for the US dollar, but let's see if the chart confirms this. All right, into the chart we go here. The US dollar, again, has been kind of chopping around the lower range. We've definitely been in a downtrend here, right? Again, very, very clear from January of 2025, the dollar has been grinding lower. Now remember, the Dixie, the DXY, which is what I'm looking at, is the dollar against a basket of currencies, euro, yen, etc., right? So it gives us kind of a basis of, is it strengthening against these other currencies or is it weakening? And definitely we've seen that since really January, it's been weakening. Now, if we go to the bigger time frame, let's start looking at the bigger time frame. The first thing that catches my attention is this pivot high here and this pivot high here. And out of curiosity, I want to use a parallel and connect that, right? If we connect that and we drag this down, look at this. Now that is some cool stuff. So what this tells us is that from the highs of December or October 2022, right up here. So now we're looking, remember, each of these candles is a weekly candle. So this is going back a long, long way. The high here, which was actually September of 2022, and the lows in here, which is again 2023, all right, that creates a parallel trend line that matches perfectly with the recent low on the US dollar and this high in early 2025 that we were just taking a look at. All right, so again, this tells us that even with the big bounce that started in September and went to January here, it tells us that this was a high and this is a lower high. So in essence, low, lower low, lower low, and lower low. So we have actually been in a downtrend on the US dollar since 2022, not just more recently, which we obviously are still in the downtrend since early 2025. Now, if we zoom out even more, the question is how low could this downtrend go? And the short term is we can very clearly see on this level here, right? So you have this high pivot here and here, and then these lows. This gives us a good basis for at least over the next year or so where the dollar is likely headed. Let's put a trend line in right here, connect it right through, keep it perfectly horizontal. And what we see here is that this is home base. Now, why do I refer to this trend line as home base? Because really, you were down here and you went back to home base. Then you pulled back to home base, came back, went to home base, went the other way, came back to home base, came back to home base. The idea is while we're stuck in this parallel, and you will have support here, at some point in the next, let's say, year or so, you would expect a fall back to this $89 DXY level. All right. So again, that's really, really important to understand is that not only are we in a downtrend in this parallel, but the idea is at some point we need to go revisit this scene of the crime home base level on the charts. Okay. So that's where we are at this point. Again, just in the short term, if you're a short-term currency trader, you'd be buying every hit of this level unless it breaks, then you would stop out immediately, and vice versa. You would be shorting this level here around 109. If it rallies all the way up there, that would be a no-brainer short on the Dixie here, the DXY, all right? Obvious to see, just history shows us major fall, and then bounce, bounce, big bounce, again, and we're starting to bounce here. Okay, so that's your shorter term. Your shorter term bias is still weak. We're still in a downtrend since the beginning of the year and going back to 2022. And then again, this clearly becomes a buyable level. By the way, the buyable level is around 95 to 96 on the Dixie. Longer term, I would expect continued weakness on the US dollar until we get to this 89 level, and then we'll have to reevaluate. We'll watch to see. Now, as long as it holds this line, you would buy heavily on the dollar, on the Dixie against these other currencies. However, if you break this level, get the heck out, because you know from this that when it hits, it has a tendency to have these bigger moves to the downside. Longer term, by the way, here, longer term, what else are we seeing? We could connect these lows right here, and this would give us an even. So again, essentially, if we broke here, this would be your next support at 82 on the Dixie. Now, what about the high pivot? What would we be looking for? Well, in the short term, going back to 2022, and I know 2022 is like 3 years ago, right? But the idea is that when you look at the dollar, obviously that's short term relative to 10, 15, 20 years ago. But the idea here is that this trend line, if it ever breaks, that would be a breakout on the dollar. Again, with the headwinds of the debt, with the headwinds of monetary policy, I don't anticipate that in the next year or two, but you always want to be aware of things just in case, right? Just in case something happens we don't expect, right? And again, if we see a recession, if we see fear because of geopolitical conflict, there can be different factors, right? Generally, recession means more printing of money, so the dollar can get weaker unless the whole globe is doing even more printing. And that's what we're kind of trying to figure out here. And then geopolitical issues can often meet, because the dollar is still the reserve currency and the safe haven asset, it can see a push in. So again, these are all interconnected, but the chart itself shows a clear downtrend, but buyable levels for quick trades, and even longer term, if we get down to some of those longer levels, that we can trade as traders. All right. So on that note, I want to bid you farewell. As always, thank you for coming and checking us out here at verifiedinvesting.com. Remember, it's no BS, just charts. We ignore the hype. We focus on probability that the charts give us, and that allows us to see clearly and unabated by emotion. Emotion makes us do things we shouldn't be doing. It makes us FOMO in, go in late and buy highs, while also panicking and selling lows. The charts will tell us support is support, resistance is resistance, trend lines are trend lines. Thank you so much. Come check out all our services here at verifiedinvesting.com. I will talk to you soon. Take care.